Thanks for the introduction and welcome you all to the panel discussion. With a background on fintech, we won't spend too much time, but still, perhaps we will start the discussion. We've got such a varied panel from old age to the new age industries. Maybe what I'd do is a quick, each of you, your own take on how you see fintech over the last 5 years, how it has emerged. Maybe starting with Manish, you can just a quick of what your view, and we can then move into the questions.
All right, thanks. And firstly, thank you for having me, Manoj, and thanks everyone for being here. So I think just my perspective on fintech, and you may have meant, when you said old age, you may have meant, organizations like Visa and maybe even me. But I mean, look, fintech, I think is, as some of you correctly said in the presentation as well, it's a very broad term, right? It could mean any technology company who works in the financial space, right? And that is really broad. In fact, I dare say that the company I represent, Visa, is probably one of the earliest fintechs, right? Because we are not a financial institution, we are a technology company. So, I would argue fintech has been around to that extent for, 50, 60 years that Visa has been around in India. So I think it's literally as broad as that. I think one of the things that I've seen in the last few years is that maybe going back 6, 7 years, the most common debate in fintech used to be whether they're going to disrupt traditional players, right? Are traditional players going to exist? Is banking going to disappear off the face of the earth and whatnot, right? And it's safe to say that none of that has happened. I think the best fintech models that have emerged over the last few years are the ones who work best with the underlying fin, if I may, right? The fin of fintech is really what defines the success of these fintech models. So I think from what we've seen, those are the fintechs who've really been the most successful, and I'm sure we'll hear many such examples over the next 40-45 minutes of fintechs who've been successful in this space. But to my mind, those are really the ones who've emerged the best. As the presentation you guys highlighted very well, is that the spread of fintech is very wide. There was going back a couple of years, a study done for the top 100 fintechs showed that the most sort of successful fintechs were in the payment space, followed by lending, then there was wealth management and a couple of others, right? So I think those are probably areas that have emerged as the most interesting or the most places where fintechs have added the most value. And as we go along, at least from my perspective, I'll try and touch upon the payment space and how fintechs have added value there. So look forward to it. Thank you. Thanks, Manoj.
Yeah. Gaurav, if you want to add on that.
Hi, thank you. And it's a privilege for me also to be here. So I'm coming from Paytm. I was rather surprised to not see Paytm's name in any of the examples here. Probably because all our research is a little West based, but nonetheless I think so fintech, as Manish also mentioned, that it is becoming a cliche now, so to say, because fintech was probably the companies which were providing some tech support for financial institutions. The disruption or so-called challenge started when the tech companies started picking up a lot of things and making them very, very simple for the end consumer, which was not happening by the financial institutions. And that is when all these changes started happening. People started talking about how to do things in much faster manner, much easier manner, as compared to how it used to happen earlier. But as we have moved, and especially in India, because the kind of disruption or the kind of adoption India has seen, it is one of the best examples in the world. But what has happened over the period is that the banking or the financial services companies, they are entrenched and people have a very big trust in these companies. And the tech companies which are coming in as a fintech, so to say, they are now kind of aligning or partnering with a lot of existing financial institutions, and this cohort or this ecosystem is evolving in a manner that the things which were missing, earlier, they are being provided, and these things are happening in very synergistic manner. The challenge is, the traditional player who is ready to adopt, and the new age company who is ready to bring these existing financial institutions in their stride, they are all flourishing. The ones which are just going ahead, individually, they may see some success, but in the long run, there is a very difficult chance for them to succeed. So the point which I'm trying to make is that fintech is not a challenge for anybody. It is, it is a partnership which is bound to happen in the country, and I'm talking about India specifically, which will take along the financial product availability to the, to the last mile actually. At least in Paytm, I can say that, our target is to provide or bring in the financial inclusion to at least 50 crore or 500 million people in the next 3 years, because that is when you will start seeing the country growing. One example, I may maybe take 30 more seconds here. One of the biggest reason why the developed economies are developed, because people there are ready to spend on various services, products, goods, etc., because they have availability to credit, or they have availability to funds, because they are included in the financial or formal financial industry. Whereas in India, even now, a lot of regulators think that bringing in everybody into financial services, or providing them the financial products, is a privilege. And when we are able to provide this privilege to every single person in the country, we will not be able to see that much more, utilization or expenses going ahead. And that is why, at least we are looking at bringing this financial inclusion to about 40% of the country, so that, we are able to start spending, we are able to start utilizing the services, or we are able to start utilizing whatever products which are coming out of the country, be it goods or services. So that is what, the fintech in totality would bring in for the country in the next 3 to 5 years. Whatever has happened in the last 10 years, I think it is the foundations which has been laid down, and people are ready accepting it. And in the next 3 to 4 years, I think we are going to see a disruption in adoption, and, far larger number of tech companies which will evolve, which will start providing a lot of other services like, Zomato, IRCTC, or various different companies which are providing services or products because people have means to pay and take credit.
Yeah. Tanushree, do you want to add a very non-tech perspective of...
Manoj, actually, as I was coming to SPJIMR, I was just thinking, I'm not just adding diversity on the panel by being the only woman. I'm also probably adding diversity because I'm probably the only representative of manufacturing.
Yeah.
But
and I also represent the non-tech world.
Yeah. But honestly, I also, for 2 years, set up a digital lending platform, right?
Yeah.
And I have had a career, and I have had a career as a banker. So I actually was thinking, what does fintech mean? And I was looking at the presentation, heard Manish and Gaurav, and when I hear fintech, I hear a lot of financial services, I hear a lot of banking, I hear a lot of innovation. But as I was making my notes, I think for me, given my career, my journey, fintech is far deeper, right? I think it's not just the use of technology to innovate, but it is to make any transaction far more accurate. I think it is not just to disintermediate, but it's more to democratize any service or any product. And I think it's not just limited to banking and finance. It's limited to the entire value chain of finance, right? It starts at record keeping. It then gets into transaction management, and then finally it comes to big data analysis. Now, that's the vast canvas of fintech that I see. if I was now to put it in a layman's term and say this is a very broad canvas that I've put for you, right? Starting from record keeping to transaction management and then to analysis. Let's just break it up into 3 other parts, right? So the most visible part is what we've all spoken about, which are the products and services, B2B, B2C, that touch the end consumer. And then there is the least visible part, which is the entire record keeping, bookkeeping. So, you know, on your B2B, B2C, you will have the Paytms and the Razorpays of the world. And then you have, let's say, a Finag or a Fin1, which does all your record keeping. So, you know, Finag and Fin1, most of you won't know, are companies that develop the software which NBFCs use to do their entire. Somebody from the student was with Aditya Birla, right? I don't know whether you guys use Fin1, Finag. What did you use? So that's the back end, right? But that's also fintech. And combining this front end and back end is the mid office space, which is where probably Manish said that Visa is a technology company, right? It facilitates, it's a pipe between the consumer and the provider, right? So I think that's how I really see fintech in a larger part, which is these 3 aspects. Now, if I was to just break it down into a normal industry's perspective and say, how has fintech really changed life for us in the last 5 to 10 years? You guys just finished your operations conclave in the morning. So let's take supply chain as an example, right? Now, supply chain is very simply buying something, transporting, paying for it, converting it into finished goods, storing it, dispatching it, and then receiving money for it. 5 to 10 years ago, you had an ERP that would do all record keeping. You had the banks that would lend, facilitate payments. And then you had all your manual bills that you would keep for transportation, storage, etc. I think life has changed drastically since then, right? Now let me just take one aspect of supply chain. Let me just say the purchase leg of supply chain, and let's talk about it. Today what happens is you have an MSME seller who's selling to a large industry. The first step is, we spoke about the front end, consumer-facing product. So you have a digital lending company, let's say a lending cart. I saw lending cart on the presentation, right? So you have a lending cart that will have embedded finance. Lending cart doesn't have embedded finance that deeply, but let me just take that example. So there's embedded finance, which will allow lending cart to give loans to this MSME. At the same time, there is a fintech that is providing the pipe to store all the records such that even the transportation bills are stored together to understand whether the loan that is given includes the transportation cost or not. And now finally you have another technology company that is keeping all the records of all these transactions so that you can do your GST filing. And lending cart, like we saw, is not working on its own. The capital that lending cart is giving is coming from one of the platform partners or a bank or an NBFC, and they have access to all of this data. So 5 or 10 years ago, where there were disparate people keeping disparate records of the transaction, today that record keeping is synchronous. Everybody has access to data. It's easy to access, it's democratized, and it is accurate without any manual intervention. So I think the fintech space has changed the way every aspect of business trade operates. It's made compliance and regulation very simple. And I think it's not about going as much into the unpenetrated as it is saying that, you know, if you were a deserving candidate and you didn't have the opportunity to a product or a service, today you have that more easily available. So I think that's my view on fintech.
Khilan, so we've kind of got a good perspective on fintech, the presentation, everything. Where I'm probably expecting is, you've been a through and through products guy. Okay. As a product guy in fintech, all the noise of what you see around, what really goes inside developing a fintech product, you know?
I think it's a good one, and I think first of all I have the least experience on the panel in fintech, and still learning. It's fairly complex, navigating through a lot of terms itself. I think what I heard in the presentation was I think you folks have a lot of depth already. For a product professional, where we pride in just discovering customer problems and magically figuring out what it would take to solve as well as then create value for the organization. I think there are definitely a few unique aspects to financial services products or fintech in general. I think one very unique thing which I have observed is that the reliability expectations are crazy high. So when you're moving money or when you're investing someone's money or anything in general, a lot of it is around the infrastructure of money movement at the end of the day. It could be from one book to another, or actual physical movement, virtual movement. At the end of the day, the expectation on reliability, the trustworthiness is just next level. And that means all the principles that generally I had learned in product, where you could, you have the freedom and luxury to break things and you learn and right shit. Kind of you got to reinvent, step back. There is still that flexibility, but kind of comes down dramatically. I think that's one big change in how product folks build fintech products versus, traditional products. The other aspect is, of course, I've been more so in the B2B space compared to B2C. So B2B products have its own nuances, where again expectations on maturity are a lot more compared to consumer products, where
you can't make a mistake and say sorry.
Exactly. So the part to forgiveness is not as easy in the B2B world. I think these are 2-3 foundational. I think changes. The other is I think the industry specific nuance is very, very. I think this is possibly the only industry where I've had to, for me to contribute as a product professional, I had to really embed in the industry. In all others, I could, pick it in 2-3 months and still contribute big time. Here, for the first year, I was just learning, immersing, embedding before I could start creating any, genuine value. And I have come to, really admire the entire ecosystem, and specifically our, forward-thinking regulator. I think we've got a lot of folks who are thinking decades ahead of time and investing in things which I think seem difficult in the short run, but extremely valuable in the long run. And I think the more and more people understand those principles, I think it's easy to, leverage that and create customer value 10x, in a very, very short span of time. So I think the last one for me is, I think this is an industry where you will see India possibly ahead, of most geographies in terms of the way it approaches. Not in all metrics, but at least in terms of the thinking and, way it approaches. And hence the opportunity that you see in building products here or creating value for customers is just humongous. I think the last wave I had seen, because before this, all I had worked in commerce for the last, I think, 10 years as a PM. I think I had seen similar wave 8, 9, 10 years back when literally, few million users used to transact. From there to where we are today, I think we are in that early evolution of, creating value for customers in the financial services space as well as businesses.
No, thank you very much. So we've kind of set context on fintech. We've had a presentation. We've got 4 esteemed panelists giving a good perspective. Now I'm going to make it slightly interesting, right? This is a finance conclave, and all finance professionals know that longevity of any business is ultimately tied to profitability, right? Because in the long run, the guys who make profits are only able to build moats and able to survive. Amazon is a classic example. A lot of companies are trying to be Amazon, thinking that you can eventually get scale can lead to profitability, right? And Manish touched upon, said that fintech is supposed to be the doom of existing companies, but Visa is still around, Stanchart is still around, and other companies are still around. You talked about how it's a learning curve, and Paytm and Razorpay have led in terms of volumes. As an individual opinion, outside of your corporates, in a world where Tesla is having market cap larger than the largest automotive company selling 10 times that, where today some of the fintech companies have market cap probably at par with HDFC Bank or some of the larger companies, do you think this is genuinely sustainable? Who do you see actually be able to deliver profitability? You can start either with the Gaurav, and we can work anyone. I mean, you can just.
Maybe I'll take a stab at it because we, in the last 9 months since we are listed, we have seen a lot of badgering, and you can empathize with me. Everybody, asks me everything is fine. You guys are You guys are doing okay. Kab tak chalegi company and all that. See, one thing which I have realized, and it's been about a year and a half for me in Paytm. A lot of it started, with the thought of solving something or with the thought of doing something which is missing. And, and things have kind of built over that. So the initial thought was not majorly profit making, but it could have been, maybe raising capital. So raising capital would have been the thought, but may not be profit making. But the fundamental thing was to solve something, and the whole company or whole ecosystem is what I'm realizing is kind of building on, or taking one step after the other. And by doing this thing, we have become so big because there were so many things which were so inefficient in the whole ecosystem that we could just keep gaining the market share. And while we were doing it, we were only trying to solve for it, may not be looking at the commercial angle that, how to make money out of it. And over a period, it has happened because I've worked in the banks also and in a fintech also, so to say. The thought in the bank is totally different. The thought in the bank is how to make money. If you're going and doing a meeting, with a customer, at the back of your mind, you will always think how much money I'll make out of it. What would be my fees? What would be my interest income? What would be my float? What would be my investment scenarios and all those things? Whereas in a fintech, it is more of a, would I be able to provide a solution to this guy? So, like Khilan said that it is, you can't make mistakes in a B2B environment. So if you're providing a payment gateway to a company and which is starting up now, you cannot goof up with them. You cannot just go and say that, for every transaction, I'm going to charge you 100 rupees and still goof up, which many traditional banks do. So for us, it becomes very difficult to go and start talking about money before start providing the service. And when you start providing the service, you just get immersed into it. So the whole thought process or whole DNA is not to look at, how to make money out of it, but it is how to solve for it and then maybe later on think about making the money. So this is the underlying thought within generally, this is how people start thinking and start providing the solution. Now we are looking at, how to make money and just because of the sheer scale which we have got and also, the commensurate data which it brings in, it has become far easier for us to commercialize everything, and the thought process is changing because we are providing a value, we deserve to take money out of it. So now, and this is what I'm seeing in the other companies as well, because in the last 12 months, at least we can see everybody is talking about making money. So this thought is changing within the fintech environment, that if you are providing a solution, please, ask for money out of it. So that thought is changing now, and it will help us to, start making money, and it will hopefully change for
Eventually
us
you'll
also.
see
Yes.
the black.
So I'll just add a perspective to that, Manoj. I think we need to look at life slightly in a different context, right? You spoke about Amazon. And Gaurav's talking about scale, getting it right and delivering value to the customer. I think Amazon was not profitable on day one. It was not profitable
10
for the
years.
first 5-10 years,
10
right?
years, yeah.
And there is a reason why in the startup world you look at the contribution margin level in the initial years and you don't look at PAT. And I talk as a CFO and an ex-banker, right? I'm taking that view. It's because, taking from Gaurav's point, you need to be able to deliver value, you need to be able to reach a certain scale, because that's when economies of scale are met, and then you start building bottom line. I think what's happened in India is this is our first iteration or first cycle of startups. I mean, look at the data that media is publishing. You had some 4 unicorns in 2014, and today you have almost like 140, 150 in a year, right? we also in this period were a country that was safer from the economic turbulences of the rest of the world. We have a large consumer market, so a lot of VC money was coming our way. And VCs don't look at valuation from a profitability standpoint. So, you know, when you're trying to build something and you're fighting for that money, you're going to deliver what those guys want. Today, because we've demonstrated that we can reach that scale, today because we've demonstrated we can reach that value, the VC hot money is drying up, right? Because that flush of funds is not there anymore. With interest rates going up in the US, people want to invest in the overseas markets. I think that's where, you know, now suddenly people are saying, is it sustainable? So I think it's an iterative process. And in this journey, there will be those who will perish. Let's be honest about it. It's not that everybody is going to sustain. I'm actually going to take Udan's example. I don't know how many of you read the newspaper yesterday. I was with Udan till March 2020, right? Vaibhav Gupta, our CEO, has actually gone and said we are on track for our unit economic profitability journey. That's a journey we started on in 2020. And I think that was the realization. Now you've got scale, now you've got the reach.
Now you make profits.
Now you make profits. So I think India is early in their journey. We will have failures, but I don't think this is the time where we can say it's one or the other.
All right. So Manish, see, one of the things interestingly that I'd heard was second mover advantage, right? So when I was in B school sitting like this, we had a serial entrepreneur who came and said, if you guys think that it's all about moving in first, it's all bullshit, sorry. You need to go with second mover advantage, and he started with Microsoft, for example. Microsoft has never really invented anything in that sense. It's already picked up the smarter thing and that. Do you really see a scenario where traditional players, be it banks or card companies or otherwise, waiting on the sideline, getting all these new companies to, you know, burn through VC's money, make a mistake, some will turn perish, some will there, and then lap it up and become bigger? Do you see that kind of a consolidation happening? A bit of what Jio did in telecom, if I may say so.
Yeah, no, and fantastic question. Very relevant, I think, in these times as well. I'll probably not go to sort of that extreme of saying that, you know, banks and traditional maybe financial institutions are waiting on the sideline as much as they are maybe partnering with the right companies or fintechs, right? So I don't think it's a question of saying, let me see who's, you know, who survives this battle and then I'll just lap them up, right? But I think from a sort of a banking and a more traditional financial institution perspective, I think the partnerships have evolved based on how much value these fintechs are adding to the banks or the traditional financial institutions' core business. So to your point, I'm not sure if it's as much as second mover advantage as much as it is how much can you partner with these fintechs to move first and move ahead of your own competition, right? So if I maybe take a step back away from fintech and from the institution or the financial institution who partners with these fintechs, equally, you know, to what I said about the best fintechs, you know, evolving, who've partnered partnered in the best possible way, the best financial institutions also who've done well are the ones who've found the best partners to work with in the fintech space, right? So, and there are two parts to it. One is, what are the partners you work with? And to your point, when do you not so much lap them up, but when do you partner with them and how effectively do you partner with them to maybe make either your own offering better? So I think in the presentation there was a discussion around neobanks, for example. Fantastic example of how banks can work with fintech companies to effectively make their own offering better, right? So if you think about a neobank is really a fintech who's fronting the whole customer relationship, right? So all of you can potentially be working with a fintech as a layer or as an app or as a UI. But it's the other opportunity and the other way that banks are working with fintechs is to use fintechs to create their own banking front end, as an example, right? And so, to your point, it's not so much sort of lapping them up, but working with them in a way that makes their own offering better. That's one. And the other way to look at it is, a lot of these fintechs almost work as distribution for banking products, right? So once again, taking a neobank example, and I saw some logos put up, the likes of Open, etc., who are neobanks. I mean, I'm using the term loosely. Neobanks is not an sort of a regulatory accepted term in India, but they are really, if you think about it from a bank perspective, they are watering holes of customers themselves. So some of these neobanks are onboarding 50,000-60,000 new customers a month. From a bank perspective, what that means is 50,000-60,000 new customers every month that just come on solely by partnering with the right fintech partner, right? So I think it's just about making sure you're working with the right partners to get ahead of your own competition, rather than waiting around for the battle to kind of complete and then picking up with whoever
So
survives.
it's partnerships more than that. So building on partnership, again, we are keeping a little generic questions instead of getting too technical. Banking is, again, probably the second oldest profession. Going with that, if you look at it, right, and I've been in a bank for the longest while, and creativity is just not encouraged. I mean, it goes in the CEO's punchline conversations. Anyone working in a bank will know that the moment you try to be creative, and if you make money, and if you don't put a risk position on worry, then you're great. But you have to work within that. It's a defined creativity. Perhaps is that the reason why you require technology companies to come and disrupt an industry which is so old? Do you, and in spite of that, do you still genuinely see culturally something change in the way banks operate or think?
Creativity is not encouraged. I think I'm going to be completely brutally honest, and this is my perspective, only my perspective, not my organization's view, but this is my observation. In a startup, you have a much younger set of colleagues who are thinking differently, whose upbringing has been different. All of, leaving aside Khilan, all of us belong to a different generation here. We've seen a different life. So our mentality is different. So that's the first differentiator, right? The second differentiator is the salaries that are paid by startups beat banks, so they get the top talent. Then come the banks, and then come the manufacturing entities. So actually what is happening is you're also taking a more risk-averse person, right? Because somebody who's worked very, very hard to come up on the shop floor to feed his family of 4 and take care of 2 parents is not going to take the kind of risks that somebody in an investment bank would. And somebody in a startup may even say, I'll take a pay cut on my salary and take stock options, right?
Yeah.
So I think those define the culture of the firms, which then defines their risk-taking capabilities, and hence the observations that we have. This is purely my experience.
So yeah, I'll just add there. I think the other thing to also think about that is, what are you really good at? What is your core business, right? So as banks, traditionally, what they've been good at, for example, is taking deposits and lending, right? That's really their core business. Over time, because of customer demand and the way banks have evolved, they've had to build modules around it, right? Payments and fancy UIs and whatnot. To your point, I think it's not so much that the creativity has been lacking. I think we should be conscious that as regulated institutions, there are a whole host of regulations, and let's be honest, they're not. If anything, they're getting more onerous.
Regulators are not known for creativity.
Yeah. So I mean, it's so without making it sound like it's an excuse. I think over time, all of these guys have gone to doing what they're best at. So banks have gone to sort of, banks have said, okay, I'm good at deposit taking, I'm good at lending. Let me make sure I'm completely kosher in those areas and do those really well. There are aspects of, deposit taking and lending that you have to do well as well, let's be honest. And then what's happened is, because of this fantastic breed of fintechs who've now come through, banks have found a really good way of making sure that they leave that piece to these guys who do that well. So in a way that, has worked out well. So it's less of, they're not being creativity. It's more, it's almost worked well because you can now focus on doing what you're good at and letting the other guys do what they're good at. So it's to that extent, that's how it's evolved.
Yeah,
And I'll add a perspective beyond fintech as well. I think folks have covered, I think, the nuances of fintech. I think this applies to pretty much any industry, right? Your incumbents have certain strengths. That's the reason they've really been successful. Those strengths not necessarily are going to help you succeed for the next 3 decades. So when there is a platform shift, when the shift of internet happened, the incumbents over here in this industry, the example you quoted, their strengths actually were, if you look at their valuations, they grew by number of branches. So they were largely, their strengths were around people-led experience, around branches, and those worked really, really well. When the shift happened, they were really not ready. And you look at alternate example, now the valuations of the other companies who really are experts in, let's say, figuring out how to make sense of internet and grow there, their valuation is almost like a proportion of cost of R&D.
Yeah.
Not trying to say, that's the only way, but kind of an indicator, right?
Shift, yeah.
So it's very tough for incumbents to really build shifts in a new area, and industries, people have done it. Like Walmart was able to an extent try and find a way to build strengths in the internet world. Of course, they've still not really caught up to number one, but they're not really bad. But many incumbents have died and they've not been able to. So even in the fintech world, we are seeing some incumbents who are building strengths in the technology era or the internet world, and some of them are doing really well. So I think it's a matter of once you grow large, of course, your ability to take risk is any which way is going to be not that large, because you've got a crazy large balance sheet P&L to manage.
Yeah.
So how much can you really shift focus and divert? And I've been a part of many failed startups and even one large failed organization. I've seen many of this firsthand where people struggle to divert focus and energy. You focus on past and it's really tough to, because you got a large, like Yahoo, great example. I spent like 4 years of my career over there. Every single product Yahoo had is now like a 100 billion company. It's by itself, including the product I was working is now a 150 billion company. And we just decided not to invest in it. Incumbent mindset, we were making money, we had a profitable P&L over there. Product had outlasted its time. It was built in 98, was not ready in 2015. So I think it's very difficult for an incumbent generally to keep innovating. That's why you never, in the last 3 decades, if you look at most economies, especially the successful ones, the top 10 keeps changing.
Yeah.
So I think it's not a problem only with fintech.
All right. Before we move on, Gaurav, one question, right? IDFC Bank, Paytm. What do you like about IDFC Bank? What you don't like? And what do you like about Paytm? What you don't like about Paytm? 2 entire spectrum. And that will kind of summate our fintech conversation, right?
So to give the background, I joined IDFC Bank when it got the regulator's license to become a universal bank. And I was there for 3 years. That was 2015 to 2018. And now I've joined Paytm about a year and a half back. So to be honest, when I joined IDFC and now in Paytm, I don't see too much of a difference, because the culture in both the organizations, at least at that point in time in IDFC and now in Paytm, was to build something. We were looking at building certain value proposition. At least we had, the type of customer in our minds, that this is the type of customer we are going to serve and this is the way we are going to serve. And the same thing exists in Paytm also. The difference is that in Paytm, the people are, as I said, that they are building step by step, that we solve for this, now we are solving for this, and now we are solving for that, and step by step. Whereas in IDFC Bank, everybody had some idea about how to build everything in day one itself, because it was a time-bound, regulated, we had a certain date by which when we had to launch the bank. So everybody was working towards building everything on that day. Whereas here it is, as I said, it is step by step. And now we have built so many things that we are kind of, looking at commercializing or bringing out value out of everything. Whereas in Paytm, it was, building everything on, from day zero and monetizing from day zero itself.
All right.
So that is the difference. But I think both these organizations had a positive vibe towards doing something, because everybody was and is looking at building something. maybe unlike a traditional organization wherein people have their own, life set because you are making money. One thing I'll tell you about the banks, why banks flourish. It is a very basic thing. Bank, just think about it as a trader. Bank is buying a commodity which is available at 4% and selling that commodity which is being sold at 10% or 8%. Right? So you are buying something for 4 rupees and selling for 8 rupees on a daily basis. So just think about how much is the annualized return. And there is no other commodity which is, which you can do, which you can sell like this. So this is the basic reason that banks become highly regulated, because this is the kind of margin you have. It becomes highly regulated because you are taking public's money. This 4% money which is available is the public money. You become highly regulated. It is a high margin business. So you become very, very risk averse. You just want to make money out of everything and go home. So that is not there, with the
Paytm
fintechs
and the
so to
fintechs.
say. Yeah.
We will just move on to a little bit of career side questions, keeping time. Maybe I'll ask this to Khilan, right? When you say fintech, now we have 4 streams of professionals specializing in finance, tech, ops, marketing. One of the things that I was told, and this is more of a validation question to you, right? To be successful in fintech, it's not enough to know finance, or a finance graduate need not necessarily do well in fintech, because you need a strong product knowledge as well. To have a fintech career, what does it really take?
I mean, not true at all. See, I think fintech also has, if not 70%, half of the organization who's not doing technology, right, and who's not doing product, and those folks play an extremely large role because they keep the folks who are building products grounded, to be close to ground and not just keep dreaming. So I think fintech succeed only because you got other functions playing an extremely important role, including the likes of banking experts. Like, we've got an extremely strong team who comes from understanding of everything, including regulations, how banks work, how bank systems work, etc. We've got a strong marketing team, a strong CFO office who understands how do you finally make money, if not today, someday, unit economics, all of those things, right? Analytics. So at the end of the day, you take out the other half, which is technology centric. I think there is extremely large opportunity, even in the core, or not the core, but the aspects of building products. You don't really need to have a technology background. That's only if you're really coding, right? So of course, other roles, product management, design, product marketing, many of them actually, folks come from commerce backgrounds, folks come from very, very varied backgrounds. I think the only thing that's potentially needed in not just fintech, any technology first industry, is appreciation of technology. That is what will make you enjoy the ride. Otherwise, you will feel you are in a wrong place. I don't think anything. You don't really need to know how blockchain works to come in and really start contributing big time in these places.
So Tanushree, you have seen the boring world of banking, the exciting world of digital lending, the stable world of manufacturing, right? If you were to give 2 tips for people to pick up a startup or a career, what are the tips you will give to the students?
So I'm going to share an anecdote with you, Manoj, on this, right?
Yeah.
And I think this has stuck with me for a very, very long time. So I did engineering, and then I got into the world of finance. So somebody asked me that, why did you do engineering? And I said, because I was good at science. Okay? Yeah, that was the reason. So why didn't you become, and I did computer
and to our credit, 3 Idiots was released much later.
Yeah.
Yeah.
And then somebody asked me, then why didn't you pursue a career in engineering? And I said, because I couldn't code to save my life, right? Manish and I were just discussing about some of our achievements during engineering, right? So I think, so the advice that I got was, pick what you like. So whether it's a company, whether it's a field. I think the one thing, the reason I moved back to manufacturing actually from Udaan is because I was missing manufacturing. The nuances as a CFO of a manufacturing business are just far too much than that of a startup or of a financial services business. And I was missing that. So I today may be in a company where my team doesn't have the same speed that my startup team did, but I'm a happier person. So I think the first step is pick what you like, because that is what you will enjoy. The second thing which came to me later on, which is when I was actually moving to Udaan, and it came from the lead investor at Udaan, and I'd like to share this with everybody. So he asked me a question. Read up on Bejul Somaya, everybody. He's a partner at Lightspeed. So when I was interviewing with Bejul, he turned around to me and he said, Tanu, I've known you. Why should I hire you for Udaan? And that too to build a digital lending platform. You don't get the core capabilities. And I said, Bejul, that's because I've seen banking, I've seen manufacturing, and I bring diversity of experiences which make me think out of the box. And he started laughing and he said, you know what, you make a lot of sense, because there is this principle that if you have a broad-based thinking, you'll be able to, at a certain level, add a lot more. And he asked me to read a book called Range, which I'm going to suggest all of you read. It's an excellent book, right? And this is what it talks about. So the second thing I'm going to tell you is never ever limit yourself. Don't say that my career path has to be linear. If I have not done something, can I, how will somebody give me an opportunity? If you sell yourself short, nobody else is going to have confidence in you. So those are my 2 tips.
2 more questions before we open for Q&A, again related to career, to Manish first. I've had a lot of people come up to me and ask, and I've had this experience with youngsters I hired at Stanchart working for me, and some of them left for startup quickly, figuring out that banking is not exciting. The dilemma that many of them may voice outright is, in the first 10 years of your career, when you pass out, and they won't appreciate it now, you believe that you're going to make a few $1 million in the fastest time possible, right?
I'm not the right person to be answering this, but go ahead.
I said aspirationally, right? That's why I said they will not appreciate it now, right? But that's where. So one dilemma is, should I join an established player and work through an established career and eventually be a CEO, CFO and make money? Or should I just cut short corner, jump and work with a startup and get tons of options? Now, when you're trying to attract talent as Visa or an established player, what's the advice you would give? Now, you've had a good run across established player. Should you really focus from money perspective, jump into the startup game? Is that even the right approach? Or?
Yeah, no, great point. And I think when you ask me about an established career, I think that's just the definition we've collectively set for ourselves, right?
Yes,
who's to say that an established career means spending 10 years in one firm and only then moving on? So I think that definition itself changes over a period of time. Our parents' generations probably had jobs for life, right? They did 1 or 2 sort of jobs. We are doing maybe on an average 4 to 5 in our careers. But that doesn't mean either was right or wrong. I'll probably echo what Tanushree said. I think it's a question of what you like doing. And really, I think everything else will follow, whether that's success or money or everything else. I mean, you can be in the most established businesses in the world, but if you're not liking what you're doing, or if you're not sort of, if you don't have the skill set to be there, then honestly, it doesn't matter where you're working. So I'd say focus on, at least, most of you guys are starting off. One, I think, figure out, just by reading up and, networking, etc., figure out what you guys like doing. I think that's probably number one. And then work at building skill sets to get there. So I wouldn't focus on the outcome. I wouldn't focus on, right now at your stage to think about whether or not you should be spending 20 years in one organization or, 4 years in 5 organizations, etc. I would just say, keep yourself relevant. The world is changing faster than, most of us have ever seen it change. So I'd say stay updated, keep reading up, keep yourself updated on what's going on in the space that you want to be in, and then just go at that, right? I think everything else that Manoj you talked about are really outcomes of that, and those will almost always fall in place on their own rather than you starting with that. So I'd say focus on the process rather than the outcome would be probably my advice.
We have time for one last question, right? So just to kind of round it off on the career trends and all. So Gaurav, if you were to say for people who want to enter the job market and want to focus on fintech, what are the 3 or 4 trends which you see as the next theme for the next 5-7 years and not really a fad? Because at Paytm now you've talked about, you've built so much scale, you're looking at monetization. What are the 3-4 trends you should pick up?
See, because everybody has 5-6 years of experience and they would have seen how the organizations work. What I'm realizing is in both established as well as the new age companies, over a period people realize to concentrate or focus on certain value propositions. So for example, in financial world it is how easily or how quickly you are able to look at the trends. So reading data, understanding data, or understanding the trends is a very important thing. Please be open to all the observations which your which can impact the business which you are in. Keep looking at all the macroeconomic, microeconomic things which are going to impact your business. Be mindful of that. That is one thing. So basically, data and data related things are very important. The second thing is, which is equally important, is the customer centricity. So whatever business you are in, whatever line of business you are in, or department you are in, whosoever is your customer, so it may be your stakeholder within the company, outside, regulator, or end consumer, whosoever it is, be very focused in delivering a value to that person. So customer centricity about your business, about your line of business department is paramount. And the third thing which is important is invest time in eventually the things which are going to make money or which will give a positive outcome. So the things like making things simple for customers, or identifying a lacuna which is available, which is there in the whole ecosystem, and working on that. So basically it is identifying the opportunity and working for that. And even if you are able to make a small dent, it will be valued, because there are very less people who are able to identify that this is the problem which is existing and I am going to solve it. So these are the 3 things I think which are important and which will remain valid and important in the time.
So thank you. Sana tells me that we have a little bit more time, so which we can either use for Q&A, or I can throw in a couple of more questions to the panel. If you guys have a lot of questions, we can consume it into the Q&A side, or we can.
Hello. Yeah. So welcome everyone. My question is to Khilan.
Sir, didn't hear. Little louder.
Yeah, of course. So I'm welcoming everyone, and my question is specifically for Khilan. Yeah. So I have some experience providing pre-deal M&A advisory, and I work across sectors, specifically TMT, consumer, industrials, and most recently I had the chance to work in fintech. But then, and while I was doing that, I was doing portfolio analytics for one of your investors of Razorpay. My question is that while I was doing that, I knew that I'm providing some kind of service, right? I'm providing portfolio and data analytics. And that's how the intersection was with fintech. My question is that what exactly goes on inside a fintech company? How is it different from providing services to fintech while really doing fintech? That's what I'm trying to get at, if my question was clear. So, I would spend
what really happens inside? What do you really do?
I would spend my day, talking to people inside the company and then taking up requests about, making slides about MAUs and funding rounds and such. But then that's about the finance or VC side of, fintech. But then what exactly goes on inside a fintech company? How is it different from providing services?
I mean, fintechs seek a lot of help from, external partners in many areas, analytics, marketing, sometimes core technology as well. And nature of work is not very different. It's just because you either do not have bandwidth, or the right sort of, expertise in that area, or it's going to take time for you to build that expertise or capacity. So you seek external augmentation, right? So that's one, area where we ourselves, and I've seen a lot of fintechs consistently use external partners / vendors, services firms to seek help in different areas, right? I think that different nuances, of course, the core of what really matters, you try and build the capacity and expertise and do not really, because if you have not done that, then, or you got to do it pretty quickly, otherwise, you're going to struggle to really create the 10x impact. And again, little bit of nuance of, in general, startup world, now not specifically all fintechs, right? Depends on the stage of the organization. If you are, really very early seed stage angel or the first couple of years, essentially it's all velocity. You go to demonstrate, because otherwise survival question. Every 6 months, 9 months, you might be out of existence altogether, right? And then as you progress to the next stage, it would become a little different, right? So appetite to think long, appetite to, invest only behind generating short-term value versus long-term value. And very simple example, like when companies like us build platforms, you don't think of, supporting, let's say, a scale of what Dream11 or a Flipkart would need on Big Billion Day to power their payments, right? Because if you're going to do that on day one, we may not even be there 9 months later. But someday, 3-4 years later, we realize that's a potential problem, and now we could think 4 years and start really building that capability, right? So I think a lot of nuances are largely around the organization's life stage and what all they do internally versus through vendors. But largely I've seen that the core of it, which is, engineering, product, and even the core in other functions, you try and keep it internally rather than seek external help. Not sure if I fully captured your question, but that's generally my point.
So for someone who is outside the organization and, providing services about searching data and researching, those kind of skills are on the outside, and what would be the skills of someone who's working inside? That's my question.
In some cases, pretty similar. It's not really very different, right? And I'll maybe give a practical example. So we spend, a month or 2 months every year to look at where, let's say, digital payments industry for India will be 5 years hence, so that we're not missing any bus, and not investing today. We do that both externally and internally. It's very similar skill set. We just need more diverse perspective, because the cost of missing a big bus is going to be very, very high. So skill sets do not really change. It's very similar BCG, McKinsey consultants internally, very similar folks externally as well. Just giving you some perspective. So it doesn't really, skill sets do not really change much. What you do internally versus externally in many, many cases.
Yeah, that's what I wanted to really get at. I mean, I understand that fintech is something that every kind of industry would touch upon, right? Starting from A to Z, that's quite possible. So just trying to get an idea as to what really goes inside. But thank you so much for your response. Yeah.
You don't really need to learn anything more other than what your education would be. What you really pick up is in the job, and just ensure lucky to find the right boss, or move company. He will take care of it.
Instead of really, instead of really trying my luck out there, is it possible to get a checklist as to these are the kind of things one should know about?
Yeah, no, absolutely valid question.
It's quite possible to get a checklist, maybe something, or maybe get a few comments if it's possible.
Absolutely. Next question.
I'm asking if it's possible to...
Sorry, I didn't get that.
Yeah. So I'm saying, instead of really trying my luck, hoping that I would get to an employer who would recognize
it's
skills.
Your luck, honestly.
I'm
and
saying,
you're picking quickly. If the boss is not good, change the company or change the job. I mean, from my experience, when I got into retail banking and then got into corporate banking, then investment banking, been on the trading floor, if it was not for 1 or 2, 3 people who are very critical in that phase of life, I would have probably got chucked out of Stanchart a long while back. Didn't really deserve to be around that long. So, and that's what, similar theme. Your first 3 bosses in your career is going to decide the next 25, 30 years of your career. So better you get that right first.
So, Khilan, is it possible to really get a list of the kind of skills, what kind of employees work over there, and what is it about?
Sure. No, we could exchange notes offline for sure.
Sure. Thank you so much.
Done, that's it? No more questions?
I would like to thank the entire panel
You're
for,
done?
for their panel discussion and their valuable insights. And it was such a rich discussion ranging from how fintech is enabling businesses and towards the end, career guiding tips for all of us.
Hi, good afternoon. I'm from the PGP FMB batch, Family Managed Business.
We have a family managed business program.
So I'm currently running a fintech platform called GoPay, which lends to transporters and shippers. So it's like a invoice discounting. We've tied up with a lot of names such as Flexi Loans, CredX, Cred Avenue. They invested over 10 crores in us, and we're lending to them. So that's why I came for this. So I just want to understand from this esteemed panel that I've read a lot of times that all fintech companies are going towards lending. Like for example, Cred, they started with their credit card thing and now they've disbursed over 500 crores last month. So is that the future of all fintech platforms, payments or otherwise, that they would ultimately become a lending company? Number one. Number two, I was just sitting here and seeing that such an esteemed panel. So is there any chance that you guys also come in as advisors to my startup or anything of that sort? So just a question,
Let me take the
Because
first one.
I see a product guy, I see a Visa, I see Paytm, and ma'am, of course, is so,
I'll take the first question only so that I don't have to answer the second question. No, look, I think that's not necessarily true in terms of lending. Firstly, congratulations on the startup and, seem to be doing fantastic. I don't think that's necessarily true. I think each of the fintechs operate in a certain niche of their own, a certain space of their own. Having said that, lending, I think, is a big need in the country today. And, Tanushree's worked in that space as well. But, so I think it's natural that, especially if you're, if you start off in the payment space, and invoice discounting probably is a fantastic example of both of those coming together, right? Payments and lending. But I think if you start off in the payment space, a natural progression may be lending if you want to be in that space. You don't have to. There are neobanks we spoke about who don't necessarily always venture into lending. But I think there's recognition that as a country, there's obviously a lending gap today, right? So traditional banks, NBFCs are able to service only a certain part of the population, whether that's consumers as well as businesses, right? You're in the business space, so I'm answering from that perspective. So there is a big gap. I think some $300 billion in lending gap as far as, I read from an RBI report. So there's clearly a need there. That means there's obviously an opportunity if you're able to participate in the lending space and add value there, there's clearly an opportunity there. So I think it's more where the opportunity exists rather than everyone eventually getting into lending. So it's up to really, as a fintech, what you want to solve for as a use case. That will determine your business rather than always, venturing into lending.
If I was to answer your question, having set up a digital lending platform, been in that industry, first of all, congratulations, you've actually picked up a niche which is a real requirement, right? Bill discounting for shippers and transporters, those poor guys don't even get the right insurance guys catering to them. I think one reason we do see, and I'm not hazarding a guess on the business models of Razorpay and Paytm, both of them are in the lending business, but I think what gives them an edge to get into lending is they have a differentiated data set on which they can run an algorithm. Because remember one thing, and you know this better than probably all of us do, that capital is scarce, right? Today, any partner that you come with, I think one thing I'd like to correct, I'm sorry, on the presentation that the students made, you said that in a platform system, the lending partners actually pay you a fee, the banks don't pay you a fee, the NBFCs don't pay you a fee, right? They don't. In fact, what they want is they want FLDGs, or first loss default guarantees from you. So that's, so they want money from you. They're not going to pay you, right? So in that particular case, having that differentiated data set gives you the opportunity to run algorithms and find different avenues of lowering your NPAs, right? And your PDs become better. But I think, like Manish said, it's just an option, but I think you've picked up a great niche.
Since you're running a company, it's not one of the students asking a hypothetical question. I'll add one small, what I've learned as a banker. Any NBFC, and this is my personal view, any NBFC getting in the business of lending is treading into dangerous territory. You can be great at payments, you can build optimization. Lending is one of the toughest business to do. It looks most simple. Lending is all about getting your costs under control. The only reason banks are successful is because they get CASA deposits and cheaper deposits.
Absolutely. And the other thing I'll tell you is in December 2021, the RBI has come out with a new digital lending application guideline, which is ensuring that these FLDGs that all these lending entities were giving that were non-regulated entities comes to a full stop. Which means that anybody now getting into a lending business would need to necessarily have an NBFC. So I think it's a heavily regulated business. You have a lot of responsibility and a fiduciary duty. So one thing that you'll have to invest into is compliance. And I think Khilan mentioned that, right? That you have a lot of people and functions doing that. You'll have to work on that.
So the second question, you can meet each of them during
100%.
Yeah.
And it would not be pro bono.
Yeah. No, these people are running. They've already raised their funding. So now somebody's going to pay for them. No, you don't need to worry. Yeah, any other questions, guys?
Sir, I have a question. I am from the information management background. My question is like, with the use of fintech platforms, these companies are collecting lot of data. And we know nowadays data is the new oil, right? So how these companies are planning to use this data? And if they use, that will be the breach of the trust with the consumer because they do not allow you to use the data.
You guys are fully, within your rights not to answer that question officially.
I'll take a stab at it. It is, quote unquote, it is all consensual. Whenever you are utilizing something, you have kind of made that person aware that this is the information we are going to utilize. Many a times, or generally it happens that the person who is giving the consent doesn't really know is giving the consent. But the point is that within the regulated guidelines, the information which is being used or which can be used is being used. And to a certain extent, in the last 6-9 months, you would have seen a lot of at least the lending apps, a lot of smaller apps which have come in and they start reading your, SMSs and all those things by taking consent, which you don't know. That is the gray area wherein, which needs to be regulated, which needs to be informed to the end consumer that this is being used. But at the same time, the responsible companies or the entities which use this information is after taking the consent that this is being used, and we will, basis this, we will come up with certain offers to you which you may choose to take or reject.
Also, just to add, I was saying there are very strict guidelines that RBI has. So just to give you an example, in a digital lending scenario, if there's a platform scenario that your batchmate spoke about, if the platform is getting a borrower and a lender on the platform has no business to collect the KYC data. The KYC data can only be collected by the lender in question. So there are outsourcing guidelines that RBI has put out that you need to comply with. The second thing is that a lot of banks and traditional institutions, and especially the larger ones, do follow the GDPR guidelines, which are the European data privacy rules, right? And Indian regulators are also coming up with privacy rules that mirror GDPR, right? So I think there is a regulatory effort on that side as well.
Thank you so much.
Also, one related point, it's always a theory of greater good. as a regulator, as people, you need to balance how much of informed consent versus convenience. Because if you were to really go out and get everything consented, then a lot of businesses won't be practical. And the reality is 90% of the customers may not even care. I mean, when we get fourth call from customer care, are you happy with the service? I say, please stop calling me, I'm happy. If I have a call, I'll complain. Now, where do you draw the line, right? So hence you will see generally regulators focusing more on putting negative and penalties for bad behaviors. Because that's the only way to scale businesses, right?
Many cases also, the platforms that expose data such as SMS leading, email leading, all of that, right? They have over time built fairly good protection frameworks itself, that what is your use case, why, and they are audited, regulated as well if you start collecting. So I think there is some method to the madness, but I think there is definitely scope for misuse as everyone's suggesting. But we are seeing more and more customers finding value from the data that is there and how the data actually augments in better experience. And a great example, like recently, guidelines saved cards, I don't know how many of you are aware, right? 30th June, there's a big change in how customers can save card to make a payment, right? Yeah. And a lot of customers did not worry about it, but genuinely there is a reason why the regulator is thinking about it. It's about the next 20 years, it's about the next 300 million users, how do we kind of make it more safe for them because it's really scaled and all. So I think there are always two sides of the coin. There will be bad apples and how you kind of make it more secure. I think the new framework that's coming up, very similar to GDPR or along similar lines, I think could be a game changer over the next couple of years.
We have time for one last question. Right. Yeah. Here, this.
Good evening, everyone. We have seen many of the opportunities in the fintech. Can you please highlight some of the adversities or threats in the fintech in the coming 5 to 10 years?
Like from a business perspective, from career perspective?
No, from the business perspective.
From business perspective?
For both, actually.
Okay. Then after see, Elon Musk has said that a Terminator will happen. You're not going that far, I believe, right? He is basically, was it Elon Musk or Steve Jobs? They perennially keep having this fight, right? AI will take over the world, right? Short of that, how bad is fintech going to be?
I don't know, as Tanu mentioned, that it is, some will perish. Till the time you are able to focus on the solution or the problem which you are solving, if you keep at it and your investor is also keeping at it, till the time you will survive, otherwise you will perish. And there is no playbook that a particular fintech would survive and the other one would not survive. It would be similar to any other industry. The only thing is that one has to keep, or remain aware that is the organization moving in the right direction? Is the focus still there or not? So it would be also a lot personal, awareness that you remain in that organization for long or not. From an individual point of view, but companies, if they remain at, focus without really losing the authenticity and the intent of doing the right business, because the regulators are catching up. In some places they have already caught up, in some places they are. So if you're not found on the wrong side of the regulator, because if you are on the wrong side of the regulator, then you are obviously gone. Otherwise, if the focus is there of the entity, it will survive.
I'll tell you the 3 challenges I see for fintech in particular. One, Gaurav said, is regulation, right? As regulations change, and if you're unable, and I've seen this in digital lending, right? When the digital lending guidelines came in December 2021, the Digital Lenders Association of India had a call, and on that call, every organization was quite upset except for Udaan, because we had kept the perspective that only a regulated entity could give out the FLDGs, right? So changing regulations is one. The second one is cybersecurity. Cybersecurity is a huge threat because you lose reputation in the market, your customer is not coming back to you. And I think the third one, which is true for any industry, would be growth expansion. I think from a career perspective, which I would say for any professional, but it's very, very true for fintech, right? you should be looking out of that after you've gained a certain amount of knowledge, experience in India, can you actually extrapolate it to overseas? And I'll tell you one thing, today the entire Southeast Asian fintech industry runs on Indian professionals. Because the customer set is fairly similar, their expectation, the traditional thinking is fairly similar, right? So I think you need to be aware of not just how to progress vertically up, but also to gain exposure, how can you get out of the country, what are the opportunities?
And one real danger if you want to see on fintech is, if you've read about the California or Alaska gold rush, if you guys, it's a very simple, in the gold rush, when gold was first found, a lot of people end up spending their entire money, life saving, financiers, investors, all of that. Eventually the people who made money were the guys who were selling mining equipment. In fintech, you'll find a lot of capital getting destroyed from the investors and VCs and all of that in this whole gold rush that's happening in fintech. That is a real danger of wealth destruction.
Thank you.
So with this, we closes the Q&A session. Thank you, audience, for your enthusiastic participation. On behalf of the entire SPJIMR family, we extend our heartfelt thanks to all our panelists for taking time out from their busy schedules to visit our campus and gracing the event with their valuable thoughts. The discussion has certainly brought new perspective, and I'm very sure the discussion happened today will be very beneficial for the entire class of 2022. We look forward to your visit again, and we also hope you enjoyed interacting with our students. I request Professor Manoj to kindly present the token of appreciation to our panelists.
Ladies and gentlemen, we are sure you know that putting together an event of this nature is not an easy task. It takes months of planning, preparation, and coordination. We would like to appreciate the guidance and support of our Dean, Dr. Varun Nagraj, Professor Niren Singh Pawar, Program Head PGPM, Professor Shridevi R, Associate Program Head PGPM, Professor Hemant Manoj, Head Finance and Economics, Mr. Bhishm Chugani, Head Career Services, Ms. Almaz Sheikh and Ms. Aditi Gadia for their relentless support in pulling this event. We would also like to thank our entire PGPM cohort of 2022 for their active participation. A big round of applause for everyone.
Student-led committees are what drive all activities and events at SPJIMR. Committees help our participants understand how to influence without power, a critical component of teamwork and management. Team Samavesh was composed of members from Industry Integration, Marketing, and Alumni Committee of PGPM 2022. And last but not the least, the core team of Finance Conclave, Ashwani Anil, Sana Suri, Nidhi Nagvekar, Suvek Venugopal, Marcom team members, Richa, Prakhar, and Revant, Elcom team members, Ronak, Mukundan, and Utsav, and all the volunteers, Anurag, Arnab, Goranga, Varun, Amlan, Neelab, Prithvijit, Gurleen, and Shashank. Let's give them a big round of applause.
Thank you, everyone. This brings us to the closure of the event, and I would like to invite all the panelists and our respected faculties and presenters to come and have a photo shoot here on the stage.